Rwanda is to host the 2020 Intra-African Trade Fair, the second in the series. Nigeria's Diamond Bank failed stress test and acquired by Access Bank. 145 billion naira is the claim settled by insurance companies in the third quarter of the year as balance of trade slows down during the same period. Abuja Airport to process 15 million passengers annually through its new terminal. This is Business Express reaching you from our Abuja studios, and we begin countdown to 2019 with a review of how the economy performed through 2018. This edition seeks to x-ray the flow and performance of investments in the country. My name is Musa Abubakar. Now, there are indications that Access Bank will take over Diamond Bank PLC after the Central Bank of Nigeria midwifed the acquisition in a bid to further consolidate the banking industry. Banking sources say the official announcement of the transaction will be made in the course of the week by the CBN. Diamond Bank recently announced its decision to drop its international operating license to focus on national operations following capitalization issues. The bank recorded its worst month on record in November, with share plunging to 61 kobo per unit on November 30th, 2018. Also, Diamond Bank's third quarter 2018 report had shown that the bank was under some financial stress, with profit after tax fallen from 3.9 billion naira in 2017 to 1.6 billion naira. This impacted the bank's earnings per share, which also dropped sharply from 17 naira in 2017 to 7 naira in 2018. As at Wednesday last week, the bank had a share price of 0.95 per unit and a market capitalization of 22 billion naira. The Federal Airports Authority of Nigeria FAD says the newly completed terminal building at the Nnamdi Azikiwe International Airport, Abuja, will process 15 million passengers annually when it begins operations. Mr. Saleh Dunuma, the managing director of FAN, told newsmen on Sunday in Abuja that the terminal building ready for inauguration was designed to enhance the operational capacity of the airport. The current carrying capacity of the airport is 7.5 million passengers per annum. He said the authority will change its modalities of operations by providing free trolleys and Wi-Fi services for all passengers in the new terminal and hopefully attract more passengers and patronage from more international airlines. The Abuja airport is one of the 4 new terminals being constructed at the cost of $600 million by the China Civil Engineering and Construction Company under the Export-Import Bank of China loan. The others are in Lagos, Port Harcourt and Kano and are being financed from the $500 million loan from China Exim Bank and $100 million counterpart funding from the federal government. President Muhammadu Buhari had in October inaugurated the one in Port Harcourt, while the remaining 2 are expected to be open for operations in 2019. The National Insurance Commission, NICON, on Sunday said that a total of 145 billion naira was paid as claims to policyholders by insurance companies in the third quarter. The Deputy Commissioner for Insurance, Technical Mr. Sunday Thomas made this known in Lagos, adding that the figure represents a 30% increase compared with 110 billion naira paid in the same period of 2017. Thomas explained further that the gross premium generated by insurance industry during the period under review stood at 315 billion naira, adding that financial inclusion was one of the tools used by the Commission to shoot up insurance penetration. As the year gradually winds down, Business Express will be looking at the performance of key sectors of the economy. This edition seeks to focus on investments in the economy. Lekatun Babatunde in this background report takes a look at how investments flowed into the economy in the course of the year.
Investment can be described as the distribution of money with the expectation of future gains or benefits. Over the years, major investments in Nigeria centered on oil and gas. Volatility and fluctuations in the global oil market signaled the need to diversify sources of income into the Nigerian treasury. The 2016 recession further exposed the vulnerabilities of a mono economy, and in getting the economy to be more productive, government intensified efforts to diversify and gain more sources of revenue, which has been identified as a major challenge to developmental strides. Both monetary and fiscal policies aligned to see Nigeria remains a top destination of investors in the year 2018. The Nigerian Investment Promotion Commission (NIPC) in its first half-year report indicated that a total of $45.74 billion was invested for 42 projects in 9 states, including the nation's capital Abuja, during the period. The report also chronicled top investment destinations by states in Nigeria in the first half of 2018 by sector, investors' country of origin, and destination states. Out of the 36 states, oil-rich River State beat the country's commercial nerve center to emerge as the largest investment destination in the first half of 2018, with 35% of the total investment for the period. The sectoral analysis of the investment profile showed that mining and quarrying accounted for 61% of the total investment and manufacturing 28%, transportation and storage 5%, real estate 3%, and the remaining sectors accounting for 3%. The report added that the investments were from investors in 11 countries, with French companies accounting for 35% of the value, closely followed by Nigerian companies at 31%. Much more investments came in during the second half of the year. Nigeria is ranked 145 among 190 economies in the Ease of Doing Business ranking for the year 2018 by the World Bank. The global lender points out that Nigeria reduced the bureaucracy to register new businesses. Starting a business is now faster through the electronic approval of registration documents. Nigeria also increased the transparency of dealing with construction permits by publishing all relevant regulations, fee schedules, and pre-application requirements online. However, other inherent deterrents to successful business operations like infrastructure, access to credit, and healthy investment environment still exist.
Ogbonna Okuku is an investment expert and joins us to discuss this all-important topic as we begin to look at the performance of the Nigerian economy in the year 2018. You're welcome.
All right, thanks for having me.
Well, let's look at investment. How would you assess generally? How would you assess investment into the economy in 2018?
Yeah, it's been pretty much not as much as we would have wanted it to be as a nation, but I mean, the good thing is what I noticed in the data that came out, by the National Bureau of Statistics, the portfolio investment actually reduced, but foreign direct investment increased. So that means there's something that we're doing right, which if we continue in that direction, we'll get more investors to want to have interest in our nation and want to do business in Nigeria.
Okay, it's a portfolio investment.
Yeah.
Could you
That
shed
would be
more light on
those who, the investors that participate in the capital market, those who just come to buy shares in existing corporations, you know, those who play there.
Now, what about foreign direct investment?
Yeah, that's what I'm saying. Foreign direct investment actually increased. If you look at the data from after the recession, now it's been moving upward up until, you know, the one of 2018 was really high, or, you know, above $500 million. You know, so that's pretty high. You know, looking at it where we are coming from after the recession. So it goes to show that yes, the executive orders given, our going up in ease of doing business have actually started, you know, affecting the way, the consciousness of investors who want to do business in Nigeria. But don't also forget the fact that we are, we're going towards a, you know, a highly contested you know, election here. So you will see that investor sentiment will actually will go down a bit, because a lot of people want to see what direction is this nation going to. Because if we're going to, it's going to be a change of government, so that means there will be change in policies and every other thing.
So okay, let's look at infrastructure. How would you assess, what role does it play in the overall economy in 2018?
Now, if you bring it
Most especially power.
Okay, if you bring it side by side with investment, or how it affects the investors, you know, how investors see things when it has to do with infrastructure, that's one of the key things that every investor will look at before they invest in your economy. We're actually doing so much in trying to market this country, because I mean, the kind of infrastructure that you require to push out your goods and services, we don't have as much compared to other countries that we're competing with. And don't forget, the way you are actually becoming better, that's how every other person is working towards becoming better. So it's a competition between you and other countries. And I say this all the time, China is still looking for investment, America is still looking for investment. So all the investors will look at it and say, okay, between China, Brazil or other countries and Nigeria, let me take my decision. So we have to work harder in infrastructure. Like you said, power. You know, a lot of things will come into play here. Yes, there's been an executive order, but there are things that are from legislation that you can't change. If you want to do power today, as we speak in Nigeria, you need to interface with at least 5 different agencies of government. Starting from, you have to acquire the land if it's going to be in a location. That means you have to deal with the state governor. When you're done with dealing with the state governor, you will come to NERC. NERC, for you to get your license, before you get your license, you must provide them with your evacuation study, which your transmission evacuation study, which must return back to them. When they've gone through all of that, you pay, and then they'll give you the license. And when you're done with that, then you now go back to TCN, Transmission Company of Nigeria. Transmission Company of Nigeria will actually look at that, you know, look at your evacuation corridor, if it suits what they can accommodate. Then when you're done with them, you go to Ministry of Environment. Ministry of Environment must have your EIA done to make sure that the environmental impact assessment is in order. And when you're done with that, you go to MBET. MBET is another organization in government. They are the ones, since you don't put power in a shelf, they're the ones that will say, okay, I'm going to buy this power, I'm going to guarantee to buy this power. So when you're dealing with this, I almost forgot, you have to also deal with, if you're doing gas to power, that means you have to also deal with NNPC. So you see, these are things that are acts of legislation that we have to actually, executive orders will not change anything here. It's something that the government has to actually change the laws, so that people will now say, okay, we have reduced the amount of agencies that I must deal with before I can get power generated. So these are the things that people must look at. That's why even in this era, when politicians say, I will give you 10,000 megawatts of power, I laugh, because it's just a joke.
Okay, what about access to credits? Have the nation recorded any improvement?
Of course, we have recorded you know, high level of improvement, because I mean, if you look at the Anchor Boras program, you know, that's an effective program that have actually worked. It's worked because of the way CBN structured it. Now, but have we gotten to where we're supposed to be? No, we still need to do a whole lot, because a lot of entrepreneurs, a lot of those who have ideas, still don't have access to to what I call the investment, the initial investment capital, because we don't have a venture capital system in Nigeria.
Okay.
Now the CBN, I think was in their last one of their meetings, you know, a few months ago, said something about the bankers committee to now look at how they can invest, you know, some of the monies that they have into equity, you know, providing equity for bootstrapping for MSMEs and all of that. So, but for now, we're still at that level where, yes, credit, we've increased credit to medium and micro, the smaller enterprises, but it's not, you know, it's not big enough, it's not enough for the level of growth that we expect in our country.
Now, did the investment align with the provisions of ERGP in 2018?
Of course, you know, see, ERGP is a document that if you go through that document, you see that until we add the S in front of the ERGP, yes, the implementation might be a bit slow. What does the S stand for? The S stands for the State Economic Recovery and Growth Plan. Now, until we domesticate some of these programs to the state government level, where the state government will take ownership of some of these programs, it will be difficult for us. But it's been, I mean, it's in line with what, you know, the projections that they've made. But although the growth, the GDP growth projections they made, we've not been able to reach that. We're still at 1.8 as against 3% growth, which was predicted in the document.
Okay, mining seems to be attractive. Does it pose a threat to the manufacturing sector?
No, it doesn't. They all complement each other, funny enough. And the funniest thing is that you can't do mining without solving the issue of infrastructure. Now, infrastructure is key because when you're doing mining, that means you're going to be dealing with heavy metals. Now, those heavy metals cannot be conveyed on our roads the way our roads are. So you have to have your rail system working. So that's why the investment that this present government doing towards the developing our railways is actually one of the best things that have happened to us as a country. And again, our inland waterways must be opened so that because these are things that you must be, you have to export. They have to be taken out of the country. So your inland waterway must be, must be functional, effective. You must have an effective inland waterway for mining to flourish. I say they complement each other because manufacturing, there's some raw material, support program that we must design where the mining sector must support the manufacturing sector. It's just like if you go into agriculture, you can't do things like glucose syrup, which is something that you need as a nation, because the way it is now, if you ask me, I'll tell you that things as simple as tom-tom, tom-tom is made up of 3 items: glucose syrup, coloration, and then your flavoring. If these 3 items are gotten from China, India, and Turkey, what does that mean? We assemble tom-tom in Nigeria, not made in Nigeria. So these are things we must look at so that our industrial revolution will be, centered around looking at our raw material support system, so that the manufacturers will not also come and depend on our little foreign exchange to still want to go and import raw materials.
Okay, Nigeria has emerged one of the early gainers of the Median Intra-Africa Trade Fair in Cairo, Egypt, and with $2.24 billion deal for regional trade expansion. What's your take on that?
I still stand with the Manufacturers Association, because now if you open up your borders the way we are now, because we are the largest market as far as Africa is concerned because of our population, if we open up our borders, a lot of things will be dumped here. And I still say this, we need to do a whole lot more than just signing agreements and going into, some of these treaties. Sometimes you have to look at yourself, look at your state and where you are per time before you take certain decisions. Now we are benefiting from it. Those kind of benefits that you see are, as far as I'm concerned, they're a bit like mirage. Because at the end of the day, there will still be a whole lot that will be dumped here than a lot that more than what we can take out in the immediate. But maybe in the next 5 years, with the direction that we're going to now, yes, we can actually look at ourselves and say, okay, let's open our borders and do business.
Okay, thank you very much, Mr. Ogbonna Okuku, for your contribution.
All right, thanks for having me, sir.
Nigeria Stock Exchange trading closed Monday, 17 December on a negative note, down by 0.21%. The all-share index closed 30,609.06 basis points, while market capitalization down at 11.1 trillion naira. 214.9 million shares were exchanged by investors in 2,975 deals. It's not been the most cheering time for equity owners as profit taking continues to take effect on the Nigerian stock market. Diamond Bank, at the heart of an acquisition move, recorded its worst performance in the week ended Friday, the 14th of December 2018. Bosede Abel takes us through the performance of the market in the week under review.
The NSE All-Share Index for week ended 14th December 2018 depreciated by 0.63% to close at 30,672.79 basis points, with market capitalization at 11.2 trillion naira. A total turnover of 1.1 billion shares worth 14.7 billion naira were traded in 14,554 deals by investors on the floor of the exchange. All other indices finished lower, with the exception of the NSE ASM, NSE Banking, NSE Insurance and NSE Industrial Goods indices that rose by 0.71%, 0.18%, 0.20% and 0.81%. The financial services industry led the activity chart with 983.3 million shares valued at 9.3 billion naira traded in 8,484 deals. The healthcare industry followed with 44.8 million shares worth 183.7 million in 253 deals. Third place was the consumer goods industry with a turnover of 42.7 million shares worth 3.5 billion naira in 2,227 deals. Trading in the top three equities, Zenith Bank PLC, FBN Holdings PLC and United Bank for Africa PLC, accounted for 438.9 million shares worth 5.6 billion naira in 2,962 deals. Also traded were a total of 316 units of exchange-traded products, ETPs, valued at 841,000 naira, executed in 5 deals. A total of 10,934 units of federal government bonds, valued at 10.7 million naira, were traded in 31 deals. 34 equities appreciated in price, with Fourth Oil PLC, John Holt PLC and Veritas Capital Assurance PLC as top 3 equities, while 98 equities remained unchanged.
Now, global stocks are not looking good either, with investors fleeing U.S. stocks funds at record pace, the slowest start of a month since 1980. Bosede Abel brings us up to speed.
View of trade on the global scene for Friday 14th December 2018 showed that stocks were mostly negative. In Africa, South Africa's JSE Africa Top 40, Ghana's GSE Composite Index and Namibia Overall Index closed negative, while Nairobi All-Share and Tunisia's Tunidex ended on positive notes. In Asia, stocks markets were lower as China reported a sharp turn of economic data that missed expectations, which affected the world's second largest economy. European stocks also closed Friday lower as weaker than expected economic data heightened concerns of a slowdown in global economic growth. Likewise, in the United States, stocks also fell after weaker than expected data in China and Europe intensified concerns of a global economic slowdown. However, the early hours of trade for today, Monday 17th December 2018, African stocks opened opened mostly negative. European stocks started lower, Asia stocks higher, while United States futures pointed to a slightly higher open after Friday's big losses.
Former Nigerian President Olusegun Obasanjo in Cairo urged all African countries to ensure the quick ratification of the African Continental Free Trade Agreement (AFCFTA) and to implement policies that facilitate and support intra-African trade. Chief Obasanjo, who is also the chairman of the Advisory Council of the Intra-African Trade Fair, was speaking in a conversation session on the trade fair hosted by the government of Egypt. He described the AFCFTA as an instrument of tremendous transformation which will change the structure of Africa and said that the IATF will help towards the achievement of its ratification. Chief Obasanjo described 2018 as one of the most significant years for Africa with the signing of the AFCFTA in Kigali in March and the inauguration of the first IATF. He argued that it was time to move beyond rhetoric and take concrete actions to tackle the challenges impeding the intra-Africa trade. Rwanda has been unveiled as the next host for the Intra-African Trade Fair come 2020. A quick look at currency market, where the Naira held grounds at the weekend. Remember to send us your feedback via email businessexpress@nta.gov.ng. You can also reach us through our Twitter, and the handle is NTA News Now. Don't forget to use the hashtag BizX showing there on your screen. Until we come your way again, I am Musa Abubakar. Enjoy the rest of the week.